Good afternoon and welcome to the ASEAN Midday Market Watch. Our guest today is David Kuo, founder of the Smart Investor in Singapore. David, as always, lovely to have you on the show.
Yeah, Selamat Tangga Hari, Brian. How are you?
I'm good. Good, thank you very much. Now, David, before we get your sagely insights, let's take a look at how markets in the region are performing. First of all, China, Japan, and Thailand are still closed. So we will start very close to home with the SGX, which is at 3,179.04. It's down 0.18%. Bursa Malaysia is at 1,596.91. It's up 0.39%. The Hang Seng is at 28,428.63. It's up 0.25%. The ASX 200 is at 7,056.4. It's up 0.3639%. And the Kospi rounds up the numbers at 3,120.14. It's down 0.23%. Now, what's your view on how markets have performed this morning?
Well, Brian, I think the clue really is in the Kuala Lumpur Composite Index. You have a look at the two biggest risers in the KLCI, and they are Hartleger and Supermax. And
so the glove stocks.
The glove stocks, yeah. Hartleger is up around 4%, and Supermax is up around 2%. Top glove is also up, but not by as much. And I think that really is telling you everything that you need to know about what is going on in the markets. There is still this big concern about COVID-19. And of course, you know, those horrifying numbers in India at the moment. And people are very concerned that maybe this virus hasn't been completely eradicated. And I think Singapore is an example of what can actually sort of go wrong. I'm not saying Singapore is doing anything bad, but I'm just saying that this virus is so difficult to control, Brian. And it really just takes somebody to take their eye off the ball briefly, and then suddenly this virus comes back with a vengeance.
Yeah, you would think that, you know, Singapore is seen as really the gold standard, besides New Zealand, for example, and Australia, who have completely locked off their borders. Singapore is sort of in between. You still have some elements of mobility, but even that's not really worked.
Well, the thing is, you can't really afford to shut down your economy entirely. You can't go down the, well, you can if you want, go down the Australia and the New Zealand route and say we're not going to allow anybody into the country. But I mean, what kind of impact will that have on your economy? I mean, Singapore is an open economy. Singapore is a relatively small population. It doesn't really have the advantage of, say, Malaysia, where you have such a large population and you can rely on consumers to keep that economy going. So Singapore ultimately needs to open up, and it's trying to find ways in which it can open up. And I think, you know, it will be very much a case of suck it and see along the way, and different economies will be trying different things. Look at what's going on in the UK. They just recently had this big event over in Liverpool where they allowed people into a rock concert. And they're trying to sort of see how that will impact COVID-19 spreading subsequently. So it is very much a case of sticking your finger in the air and saying, which way is the wind blowing, Brian?
Yeah, and also just trial and error as well, because there has to be a middle ground. As you said, we can't have economies going into full lockdown anymore.
Yeah,
it's just too expensive. We can't afford it. Now, speaking of Australia, the trade surplus came in for March at 5.57 billion Australian dollars. Now, that was more than 2 billion Australian dollars less than February. Now, the forecast actually had been a surplus of 8 billion Australian dollars. Now, according to a Reuters poll, half an hour ago, the Reserve Bank of Australia just announced that it was keeping its rate flat, unchanged. What should we read into these two data sets?
Okay, right. First of all, if you have a look at Australia, the economists got it wrong, right? I mean, they were forecasting a surplus. We did get a surplus, but certainly not as big as some of these economists were expecting. But still, it was a surplus. And I think, you know, part of the reason why the surplus was not as great was because Australia is importing a lot of oil. And what does that tell you? It means that the economy in Australia is probably sort of growing, and so it requires a lot more oil. But the other side of the equation is it was exporting a lot less. So We know about this dispute between China and Australia at the moment, and China is refusing to import Australia coal, and instead China is importing its coal from America. And as far as I know, I'm not a coal expert, but I'm told that American coal is not as good as Australia coal, and so therefore China is buying lower grade coal at probably a slightly higher price than it could do from Australia. And Australia is having to find new markets for its coal, and it's exporting its coal to India at a lower price. So I think it really is a reconnection of a lot of these supply chains and different industries to try and sort of overcome, first of all, the political issue. And of course, you know, we have overlaid on top of that the pandemic issue. And the other thing is, China is importing, as far as I know, 0 lobsters from Australia. I don't know about you, Brian, but I'm partial to lobsters. And if there's 11,000 tons of lobster that China isn't buying from Australia, it probably means that you and I will be able to have a lobster meal at a fairly reduced price. I'm just hoping that, I'm being a bit facetious here. I'm just hoping that China will pick a fight with Malaysia so they don't import as many durians as they have done in the past. Because those durian prices were going through the roof because Chinese consumers suddenly took a liking to your durians. And of course, your durians from Pahang are very good. And those prices are so high now that even people here in Singapore can't afford those Mao Shan Wang durians.
Yeah, absolutely. Now, you know, David, another byproduct of this is UK consumers are enjoying cheaper wine because exports of wine from Australia to the UK are up almost a third. So they found alternative markets for their wine exports.
Yeah, you're absolutely right. And I think, you know, if you have a product and if you have a good product, and if somebody doesn't want to buy that product, say China doesn't want to buy either lobsters and wine. Wow, it's making me salivate at the moment, the idea of having a lobster and wine meal. But I mean, if China doesn't want to do that, I mean, it really is doing itself a huge disservice. And I think sometimes you can't really sort of mix politics with economics. And the moment you try and do that, you end up with a mess. And really, I mean, China is doing its own citizens a lot of disservice simply by shutting off Australia wine and shutting off Australia lobster and having to go and buy lower grade coal from America. I mean, what does that tell you about, you know, any government that tries to sort of impose those kind of restrictions? It really is hurting itself.
Well, one of the byproducts that you have is price inflation for those goods. Now, David, I want your insights on price inflation because you wrote an article a couple of days ago about inflation creeping in. The Federal Reserve is sticking to its line that it's not a concern at the moment, but around the world, the US as well as in Asia, the fears of inflation are creeping. You've got material prices that are going up. You know, in some markets in ASEAN, steel bar prices have doubled over the last 2 months. Talk us through some of the key points that you brought up in your article, which you wrote a few days ago.
Okay, I think there's a couple of things, Brian. I mean, the first one is you can look at the official numbers that come out from governments. I mean, what governments try and do is they build this consumer basket, they put things into the consumer basket, and then they have a look at how prices have changed now compared to, say, a year ago. And they say that, you know, inflation is fairly muted. But within that basket, there are lots of goods, things that you and I buy on a regular basis. So there is 2 types of inflation. There's average inflation, and there's also personal inflation. Yeah. And I look at, you know, company results. And just recently, I mean, Kimberly-Clark said that they're having to put up prices of Kleenex tissues. Pepsi says they're having to put up the price of their soft drinks. And then you have Colgate-Palmolive saying that they're going to have to put up the price of toothpaste. I mean, these are things that we buy regularly.
Yeah, these are staples.
Well, exactly. And then of course, you have Procter & Gamble saying they're going to have to put up prices of things. So what it really means, Brian, is that if you want to blow your nose, if you want to go and quench your thirst, if you want to brush your teeth and wash your clothes, it is going to cost you a lot more than it did, say, this time last year. So, I mean, that is inflation. But of course, I understand what the Federal Reserve is saying, that at the moment there are some supply chain issues and consequently prices of goods will have to go up. But they say that hopefully this will abate. But there is another side of this, Brian, and that is that inflation helps people who are in debt and countries who are in debt. And if you have a look at America, they borrowed so much money by issuing all these bonds.
Yeah.
And so, I mean, they are being burdened by the amount of debt. And inflation helps to erode that debt. It doesn't feel as bad as it did before. I mean, I remember sort of buying my first house. It cost me about 20-odd thousand pounds. Can you imagine that? Buying a house for 20-odd thousand pounds? I mean, you can almost sort of do that using a credit card now. Whereas, you know, property price inflation is such that 20,000 pounds is peanuts now.
Yeah. Now, David, thank you very much for taking your time to share your insights.
I'm going to blow my nose now.
We've been speaking to David, co-founder of the Smart Investor in Singapore on BizTech, ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations. Please like and subscribe to our Facebook and LinkedIn pages. Thank you very much for watching.